Hi, see you again in this module 3. Now we are going through perpetual inventory system. Inventory means the same as stock. That means your company stock. In other words, your company inventory. Okay, so previously we have learned periodic inventory system. That means, or periodic stock system. It means the same. That means you don't care about your stock until at the end of the year you do a stock count, you find out your stock value, and that stock value you will post it to your trading account and the balance sheet. Okay, we have already discussed and explained on that in the previous videos. So now, okay, so now let me imagine a bit. If I have a small provision shop, or I'm a very small business owner, I don't need to know my actual profit, and I don't need to know my actual stock at any point of time. I I can afford to wait until end of the year before I know my actual profit and my actual stock. So I'm just a small business owner, so what the fuss? I can wait until end of the year, then I do a stock count and I find out my actual stock value. But for some businesses, probably larger business, probably you are opening quite a huge supermarket, you would need to know your actual stock balance in details at any point of time, because first thing, for stock management purpose, and to cater to customer, a good service to customer, you would need to know your actual stock value at any point of time, the detailed actual stock value according to items. And also, when you know your actual stock value at any point of time, you would also know your actual profit at any time. So in other words, your stock needs to be real time. Therefore, you will do perpetual inventory system. Okay, for perpetual inventory system, stock or the inventory is recorded every time a sale is made. Okay, when a sale is made, your inventory goes out. Okay, so for perpetual inventory system, this is a sample simplified trading and profit and loss account. Look here, sales less cost of sales. Okay, cost of sales is just one line, one item. You don't have a breakdown cost of sales, opening inventory, add purchases, less closing inventory. For perpetual inventory system, cost of sales is just cost of sales. There is no further breakdown into opening inventory, add purchases, less closing inventory. This happen only in the periodic stock system. So over here is only one account, cost of sales. Okay, sales less cost of sales, you will get gross profit minus your expenses, many type of expenses, advertising, stationery, wages, salaries, rental. So all these expenses add together is 2002. Then I get my net profit. Okay, this is an example I'm showing you. So on the accounting side, we will have an inventory account. This inventory means the inventory that will appear in my balance sheet. Okay, this inventory will not appear in my trading and profit and loss account. This is the inventory in my balance sheet. Okay, that means the stock that is supposed to appear in my balance sheet. That means at 31st December 2014, okay, my inventory balance will be 5,000. So in my balance sheet at 31st December 2014, my inventory is 5,000. Okay, this is the inventory balance at 31st December 2014. So this inventory in the balance sheet is an asset, so it's a debit nature, so it is supposed to be a debit balance. So on this side, on this left side is a debit side. Okay, so this side I put it plus because this represent the increase in inventory. That means when the stock come in, I will put on this side, on this left side, which is the debit side. If the stock go out, I will put on this credit side. So this side This side is the stock come in. Okay, stock come in. That means the inventory come in. Okay, so this side will be the inventory go out. Okay, so this side will be the inventory go out. Go out. Okay, so let us not confuse. So when the stock goes out, you put on this right hand side. Okay, on this right hand column. So on 15 January 2014, okay, I purchased inventory 5,000 by check. On 10 April 2014, I purchased inventory 6,000 by check. Okay, so what is my double entry? So look here. On 15 January 2014, you debit inventory. Okay, on this left hand side is debit inventory. You credit bank because your money go out and to purchase inventory. Okay, on 10 April 2014, you debit inventory 6,000, you credit bank. Okay. Now, on 1 May 2014, I sold inventory costing 2,000. That means the inventory of 2,000 was sold. Okay. When it's sold, that means it is by cost already. Yeah. So in the previous video, I've explained that you have not incurred the cost yet until the item is sold. So when it's sold, it will transfer to the cost of sales account. Cost of sales account is something like an expense, so it's a debit nature. Okay. So this one goes out and become your cost of sales. Okay, 2,000. And then similarly on 31st August 2004, inventory costing 4,000 was sold, and then it's sold and become your cost. Okay, so that's why the total cost of sales for this year is 6,000. Okay, now look at the double entry. Okay, on 1 May 2004, 2,000 of inventory was sold for 3,005. The customer paid cash to buy. The customer paid cash of 3,005 to buy your inventory, which cost the business $2,000. Okay, so this 2,000 was sold to the customer for 3,005. Okay, so that means you have incurred the cost of 2,000, so debit cost of sales. So you debit cost of sales here. So that means the inventory go out, okay, go out and then go to cost of sales account. Okay, so you will debit cost of sales, credit inventory. So the customer paid me cash, so debit cash and then credit sales. Similarly, on 31st August 2014, 4,000 of the inventory was sold to the customer for 6,005. The customer paid check. So that means the customer paid me a check of 6,005 to buy the inventory that cost the business $4,000. Okay, so you debit cost of sales. So that means it goes out from the inventory account and goes to the cost of sales account. Okay, so you credit the inventory. Okay, so you credit the inventory and then debit the cost of sales. So the customer paid me check, so I debit bank and I credit sales. Okay, so hope you understand this. Any question, put on the comment. Thank you.